got long SM75 and sold a call spread and Apple against it. Like that kind of stuff is the really cool stuff you can do once you get your feet wet with your first trade.
Yeah, it really opens like we always say, or like I always say, at least, like so many permutations, like just like once you get into options, it's like, oh, I don't just buy the stock, or I don't just buy this one thing or whatever. I can make money off of it going really high. I can make money off of it going down. I can make money off of it staying unchanged. And then you add futures on top of it with its different, indices and different asset classes like gold and crude oil and different crypto spaces that futures are getting into a lot faster than the other product types. And it's like, wow, now I've gone from just being able to buy something to being able to essentially, I mean, what it comes down to, Mikey, is like making money in different ways, right? Like that's why you add options or futures to your toolbox. Is just like, I went from 10 or 20 years ago, basically the only idea is I can make money from this thing going up. And now I can make money thanks to options and futures in a ton of different ways on a ton of different asset classes as well. So let's get into it. And I want to dive into maybe not the most interesting asset class in terms of like volatility and what everybody's talking about on the weekends, but I do have one of the lesser volatile asset classes and one of the just smallest markets on the planet. I mean, I get some guff from our compliance officer just because we haven't fully confirmed this yet. I don't know how to fully confirm this, but I'm pretty sure S2I is the smallest futures product in existence. It's at least one of the smallest futures that I know of, and I think it's a good place to start with trading futures. I mean, similar to in options, Mikey. I mean, what do you always tell people is the best place to start with options? It's got to be a low risk strategy, right?
Yep, lower strategy, and just really not necessarily to make a ton of money, but just to see how this thing moves. See how these contracts and the prices move with the daily change and the underlying you're trading. But yeah, I agree with you. I think the S2I has got to be the smallest margin, at least, if it's not the smallest futures product, but it's got to be one of the smallest for sure.
Yeah. So this is a market that is about $700 in price as of when I took this screen grab yesterday, although the market is up here today. And it's going to cost you about $138 to buy or sell. That margin works on both sides. Every penny that it ticks up or down is just going to be $1. And on average, this market moves about 33 cents or $33 per day. On the bigger days, it can move 60 cents to $1, which is $60 or $100. And, this is really where I love to get started because like we say, there's not a smaller product that I know of. And the best way to learn futures or options or any kind of financial product is to buy it or sell it and just kind of watch it move in your account, feel what, if you feel like a ton of anxiety watching this thing, it'll only tick probably like at most $5 to $10 every couple of minutes. And that's at most there. If that's giving you anxiety, then maybe, yeah, futures aren't for you right now, but this is better than buying any big textbook, hardcover book about futures, about the term structure and all these different things. Buying or selling a market that only moves about $30 on the day and committing it to a day trade, which just means I'm going to buy or sell this thing, watch it move for a couple minutes or a couple hours, and then get rid of it. I mean, that's the lowest stress, the lowest risk way to get started. Because, I mean, you and I have both studied under Tom Sosnoff, who is of the mind that you throw all of those textbooks out and just put some money in an account and start buying and selling stocks, buying and selling options, buying and selling futures, because that's the best version of an education in any financial product, right?
Yeah. And I think that goes for really anything. Like I can understand how hockey works, but it's very different when I'm actually out on the ice and smashing into the walls because I can't stop myself. But at least with small exchange products too, I like the reduction in stress with the small size, but it's also cash secured. So you're not going to have to worry about physical delivery of any of these products. Everything just settles to cash. and it makes it nice and easy to trade. If you're like me and you forgot to roll your contract, everything's going to be fine. You're not going to get, delivery of gold bars to your apartment door. So
it is truly, I like that you went hockey with it, because I think you and I both came up playing hockey. At least you played hockey as a kid, right?
I ice skated as a kid, not like twisting around, but I went on the ice and I just went in circles, like at the local rink. So I can ice skate, but once I had the puck and the stick in my hand, I just became a whole nother beast. But I still play. Like some of my friends play hockey, and I'll still go out there and give it my all. But again, I'll smash into the boards because I have a hard time stopping sometimes.
That's exactly right. Like when you learned ice skating, and still to this day, it's like, we're not going to drop Mikey in the middle of like a YMCA game with like some old Canadian NHL players, and he's just going to get run over, right? Like, it's like, all right, just put him on the ice, let him skate in circles. Yeah. Let him see like, oh, I have to use the edge of my skate to stop. It's like bowling for the first time with the bumpers. And that's what's trading for the first time in futures with the S2Y is like, even if the market somehow, and this has never happened in this market, if it rallied 100% or fell to zero in the next couple of minutes, it's only a few $100s, which you can't find that in any other futures. I mean, most of the futures products, even the micros, are several thousands of dollars. Here, it is really like Mikey's first time ice skating, or a lot of people bowling with the bumpers on. Like, there are some fail safes. Yeah, if you take it to expiration and you don't know quite what expiration is yet, it just settles to cash, which just means you get the money you made or lost in your account or taken out of your account. You don't have to worry about too much. It's very low stress. Now the question becomes, give me a reason to do something, right? And this is my whole thought process. And it comes off as a very simple one, but it allows me to make decisions on a plethora of different futures markets all throughout the day at any moment. I simply look at these guidelines here. Oh, okay. It tends to be in this range, this one standard deviation range of about 30 cents. When the market's outside, Mikey, of 30 cents to the upside or downside, I'm just getting on the other side of it. And so I bring up December 10th when 2-year yields fell pretty dramatically on this day, but they actually bounced back. And you could see here the market starts at about $6.75, falls all the way down below 640, signaling, oh, it's outside of the range. Maybe I'll buy it, get on the other side of this down move of more than 30 cents. And then it comes back and I can sell it back for, maybe I bought the 640s and I can sell it back at 660. I made $20. That's a nice little move. I mean, this is the contrarian way of trading in futures, right? In a nutshell.
Yeah, absolutely. And I think I can't stress this enough. I feel like we talk about this all the time on this show and other shows as well, but using the data, the expected move data and the standard deviation data to help you make decisions is literally one of the most intelligent things you can do, but it also simplifies everything. So like there's plenty of products today that are down big, well over the expected range, or maybe they're up big, well over the expected range. Probably Tesla is an example of that. So like if you have a bullish trade in Tesla and you see that it's up 110 points, and then you look at the expected move for the next 2 weeks and it's only 100 points, like you're killing it right now. And that might be a reason to close the trade because you're well over the expected move. Whereas if it was only up 20 points and the expected move for this week is 100 points, well, you're still well within the range. You're probably still profitable. But if you want to hold it, then that's totally fine because you haven't had this massive move that's outside of the expectations in your favor.
Absolutely right. Like you said, it's not only the smart thing to do because it's this idea. Anybody who watches sports or anything else, it's like, oh, this coach is using advanced analytics and he's making great decisions for his team in the moment. Whereas a lot of people out there who and there are some great coaches who use their gut historically, but it's like, oh, there's 1 minute left in the game. We're down by 4 and we could go up here by 6 or 8. Like what do we do in this football game? It's the same here. Like let the numbers make these decisions for you. The market is so efficiently priced, and the historical data that we use here for these examples in futures, but also options traders like Mikey uses just from the options chain platform, that implied data that you get from those options it's all so efficient and it's also telling of what the market can do. Let those numbers make the decisions for you. Not like, I have a hunch that 2 years, I could sell them here, but I want to sell them up $1. It's like they don't go up $1 in any given day. And so you're never going to get that trade-off. And so here's just another example on the 15th, market up by more than 30 cents. This was an FOMC day. Market came all the way back. And these are just, I'm using some of the starkest examples here, but it doesn't always occur like this where the market goes up one standard deviation, then comes all the way back to unchanged. But again, it's like market starts at 670. I want to make my first futures trade. I don't know whether to buy or to sell. I know that this market moves about 30 cents. Oh, it's up 40 cents or 50 cents. I'm going to look at selling it and see if I can make 10 or 20 cents, the market coming back down into the range. And Mikey, I mean, if the market doesn't get to these standard deviations, that's totally fine. Then today isn't the day. If it's inside of that 30 cents, you don't really want to make yourself trade the chop. Now, if you want to get started and you want to just feel what it feels like for a couple of minutes, then I would say just go out there, buy S2Y and close it a couple of minutes later, and you'll take, a $5 profit or loss you're likely to take if market movement is natural. But you don't force anything, because here's the deal. Whether it's Tesla and options that Mikey's looking at, or S2Y and futures trading or what have you, there's a million markets out there. And one of them is going to be outside of its range. One of them is going to be giving you a reason to trade it. So you don't have to force it if they're inside the range.
Yeah. And one of the other things I think it's important to remember is there's 252 trading days in a year. So like, even though you're staring at your platform, you might think you need to do something. You've got plenty of time to find opportunities. There are always opportunities that present themselves. And that's especially true if you have cash on the sidelines and you're waiting for these opportunities that make sense from a data standpoint.
Absolutely. And we don't want to leave you hanging here. The last piece before we move on our ways for the day, for the first trading day of 2022, and what a day it's been, plenty of action, is closing the trade. Now, like I keep alluding to, I often think when you're making your first futures trade here, you don't have any pattern day trading or anything like that. In fact, day trading is kind of encouraged with this product type. You hear me say like, oh, just put it on and then close it for a small profit or loss. That's almost everybody, myself included, first time trading futures is just like, just buy or sell the thing, watch it move for a couple of seconds or a couple of minutes and close it. But if you want to get these mechanics going, my whole thing with closing trades and day trades in particular is taking a fraction of that standard deviation. And just like you said earlier, Mikey, like let the numbers decide these things for you. Like if the data and the advanced metrics put me into the position, you bet that they're going to take me out of it as well. So if the market's up more than 30 cents, that's a standard deviation, I sell it, then I'm probably going to look at a profit or a loss that's about half of that. Or if you want to look at something larger than half or smaller than half, that's up to you. So the standard deviation at 33 cents, I'm just looking for my P&L to show plus $16 or minus $16. And then I'm out for the day trade. If that doesn't happen by the close, then I'm just closing this position before the close of futures. Almost all futures close around 4 p.m. Central Time, and that includes small futures as well. You don't want things. It's not that there's a bunch of risk overnight, especially in a small product like this, Mikey. It's just, I wanted to day trade. I wanted to get this thing started, see how it feels, and trade intraday. I don't want this position tomorrow. And it's like, well, now what do I want it to do tomorrow? This is just meant for this time frame. So I'd either close it for that profit or loss or close it by the close of futures trading for that day. Does that all make sense?
Yeah, I think it's perfect. And I think cutting your expectations down a little bit is, definitely something that we can do, especially for day trading where we don't expect to be in it for a long period of time. And, you waited for this opportunity. You're trying to take a chunk out of that opportunity. You're not trying to hit a home run with a big directional reversal for the most part.
Absolutely. And today we're actually seeing those S2Y futures up more than a standard deviation, around $8. And it would be a matter of, selling that $8 price or wherever it happens to be up over 30 cents and just taking that as your first futures trade. Today is a great example of it. And you can look for your $16, which is the half standard deviation, or like Mikey says, just like you could take a little bit off of that, maybe look for $5 in profits or losses and make your first futures trade here on the first trading day of the year. I mean, what a better time. Everything is moving around, and I'm excited to trade the rest of the year with you, Mikey, but especially today. Is there any new stuff before we jump that you want to talk about that you've been doing today outside of the long Bitcoin, or where are your eyes?
So I've got a couple of different positions on. I'm already long SCCX. The contract there, it's basically up 9 points or $9 right now. So pretty flat, but yeah, just kind of positioning for some new trades. I did enter a new Snapchat position. It's down 40 cents, and implied volatility in there is high. So I'm kind of just betting against that movement. Sold a 40 strike put in Snapchat for $1.77. It's come in 6 cents already. So we'll see if that works out, but yeah, I'm positioned for long Bitcoin exposure. And that's how I will remain for the rest of the year. Hold me to it. Okay.
I'm going to hold you to it. Yeah. There's no tapping out to the downside or the upside. There's no like, oh, it's back to 65,000. I'm going to get out. No, you're holding it, man, for the whole year for what you wanted out of it. Thanks so much, Mikey, for joining us here on Monday's edition of Small Stakes. Thanks everybody for watching. Feel free to hit me or Mikey up. Mike's very prolific on Twitter and on YouTube. Check him out, Mike Butler. He also has his own show here on the Tasty Trade Network. Make sure to check that out at 11 a.m. Central Time every day. And check me out here on Splash into Futures. It's coming up next. Pete Momat is rearing to go. First trading day of the year in almost every futures market outside its daily range. We're going to get a lot of trades on here. Everybody stay tuned for that. And thanks for watching Small Stakes. Peace.